Bajaj Finserv and Dr. Reddy's are expected to come out with their December quarter earnings. And post giving a big thumbs up to Adani Enterprise, Cantor Fitzgill now seeks a likely demerge of Adani's airport business after completion of Navi Mumbai's airport. And welcome, this is Samina Nalwala and you're watching the F&O Show, where we take you through all the derivative action in the markets. A quick check on the market this morning. The Nifty and the Sensex both trade flat after that massive rally we saw on yesterday's day of trade. Bulls are taking a bit of a break in today's session. Bajaj twins are under pressure, but Agam is standing by with more details on the F&O action. Agam, not surprised that we're taking a bit of a break after a very sharp run-up in trade yesterday. But what are the key factors that we're watching out for?
Yes, absolutely, Samina. So for now, we are looking at the Bajaj Fin twins. Well, perhaps to a certain extent weighing down on the indices. But as far as the Nifty is concerned, it is absolutely flat. We are looking at a little bit of positions building up around 1.3% in terms of open interest increase towards index futures. But coming down to the Bank Nifty, that is where we are seeing once again marginally in the red and not too much increase in OI there. Of course, in terms of the options market, let's take a look at how things are changing. I reckon there won't be a lot of changes when it comes to the options markets. And, we should have an idea about how things are panning out when it comes to your open interest. So this, of course, is your open interest distribution. And as we were pointing out earlier in the session, that your OI max put stands at around 21,500. And on the higher end, we're seeing max call OI around 22,000, which gives you a rough range of about 500 points. In terms of today's day of trade, when it comes to the Nifty, we are looking at unwinding in the 21,700 put. Of course, we're thereabout, so we don't have too much traction otherwise. But in terms of the Fin Nifty, because it is the Fin Nifty expiry, we're currently, the Fin Nifty is currently testing 20,300. Now, that is a little bit of a worry because at the moment we are seeing a lot of puts being written. But the question is that if we do see that particular level being lost, and if we do see the Fin Nifty move considerably below that mark, where there could be some sort of a trouble as far as that options expiry for today's is concerned. That said, there's plenty of resistance offered around 2,500, 2,600. So we'll continue to keep an eye on a whole host of these levels. But let's talk about stocks then. Let's talk about all those which are, in fact, with focus on seeing an increase in open interest. So shorts building in Bajaj Finance and Coromandel, and longs building in Z Entertainment, Bosch and Emphasis. And on the other hand, we have, stocks which are looking at unwinding. So short covering in Cholamandalam, Hindustan Aeronautics, Ramco Cement, Piramal Enterprises, as well as GSW Steel. A lot of green, at least as far as short covering is concerned. And I reckon under the radar, beyond the benchmarks, that is what we are keeping an eye on. And that's perhaps is where we are seeing a little more strength as compared to the benchmarks today, Samina.
A couple of sectors that are still doing quite well today and which didn't participate as such yesterday is media, metals and IT. Let's take you through the top gainers in the metal pack. You've got JSL, that's up 5%. SAIL is trading with a gain of 3%. Hindustan Copper, Nalco, Hindalco, Jindal Steel, Tata Steel, Hindustan Zinc. That whole pack is trading with very, very solid gains across the board. So a strong rally for metals is what we are picking up on. You've also got sharp gains coming in for IT. So it may not look as euphoric as you'd have liked, but a 1% gain on a market on a day when the markets generally aren't doing too well. Infi is up 2%, Coforge is up 1.5%, Tech Mahindra, Persistent, Wipro are some of the other gainers in trade. Smaller sector, but worth a mention is how media stocks are doing this morning. 2.5% rally for media counters. Z is up 7%, Dish TV is up 4.5%, DB Corp, TV18, Sun TV, Nazara, NDTV are all trading with very sharp rallies in morning. morning trade. Well, but the breadth of the market is flat. The VIX has seen a jump as well, so volatility continues to spike in today's trade as well. We're joined by Vinay Rajani, CMT, Senior Technical and Derivative Analyst at HDFC Securities, and Richard Jain, CMT, Lead Research Analyst at F5 Paisa. Thank you, gentlemen. Thanks for joining us this morning. Richard, I'll come to you first. On the Nifty, what's the trade? After a sharp run yesterday, taking a bit of a breather in today's day of trade, would you initiate a strategy on the Nifty this morning?
Hi, very good morning to everyone. Well, if we look at the data, then the recent correction of 2 weeks, which we saw from the all-time high, was mainly because of FIS selling. But they have rolled most of the short positions to the January series. And if you look at the long-short ratio, then only 22% at the start of series, on Thursday last week, only 22% positions were on the shorts on the long side, with net short positions of over 108,000 contracts. And these positions are usually considered short heavy. So short heavy in the sense, in technical analysis, when we look at overbought or oversold zones, in derivatives, we see such data as short heavy or long heavy. So whenever there are short heavy positions, chances are there of short covering move, and we witnessed some short covering by them yesterday. So I think in the near term, because the positions are quite short heavy, then we could see some continuation of the short covering move. Now 21,600 would be the important support that I would watch out for till the markets are trading above 21,600. Possibility of some pullback move would be there, and 21,900, 850, that would be the range where one can expect the markets to resist again. So buy on dips should be the strategy for if you're looking from a very short-term trading. 21,700 if we get, so ideally I think one can look for buying opportunity over there today, but not at current levels. At current levels, I'd look for more of a stock-specific trading opportunities, because we can see that today, in spite indexes are not much positive, but the market breadth is quite healthy. So it's better to trade with a stock-specific approach for now. But in case if we get any dips towards that 21,650 to 21,700, then I think the risk-reward ratio could become favorable to create fresh longs over there.
Okay, that's the view coming in from Richard. But Vinay, good morning to you as well. How are you placed when it comes to the benchmarks? What are you doing?
Yeah, good morning and thanks for having me on the show. So yes, after yesterday's stellar move, we have seen some short covering the bank Nifty, and Nifty has witnessed a long build-up in yesterday's session. Almost 3% long build-up was seen in the Nifty. So Nifty is looking stronger as compared to the bank Nifty. And if you were to look at the put-call ratio on 1st Feb, the Nifty put-call ratio has just reached to 0.92 as per the yesterday's data. So previously it was 0.74, now it reached to 0.92. So in considering the yesterday's stellar move, put call ratio is not showing any overbought sign. So today could be a breather day after stellar rally yesterday, but overall trend remains positive, because yesterday we saw a downward sloping trend line breakout on the Nifty charts, and 21,600 was the resistance. Now it is expected to act as a support going forward. So keeping that stop loss in mind, one should remain long in the Nifty, and I'm expecting that sector rotation would continue to be there. Today, IT is showing strengths, and in the coming days, IT could perform well, because most of the large cap IT stocks came out with a very good results. So they consolidated in last few sessions, and now they are started performing now in the market. So I am of the opinion that today could be a breather day, but overall trend remains positive. If you are a trader, Nifty can be bought at the lower level. Let's say if you were to take a trade in Nifty, I would suggest buying Nifty Fab future on dips around 21,800. Stop loss can be kept at 21,700, and target for the short term remains at 22,000. I would ignore going long in Bank Nifty because it is not showing strength. No doubt short covering may come, but overall strength and data suggests that we should continue to prefer Nifty for going longs, and 22,000 is the ultimate target. On dips, 21,800 is a buying level at which traders can initiate fresh long positions.
Richard, I know you talked about Bank Nifty, but what are you doing with the Bajaj twins today? Is there an opportunity for a trade on either sides?
I think it's more of a result-based move that we have seen today. But many times we see that whenever we see such huge gap ups or gap downs post such events, and the follow-up moves are more important. The stock has already seen a correction recently. It's not a one-day correction which has happened in the stock. If you look at last, in fact, in the entire January series, it has already corrected from that 7,800 levels to sub 6,900 levels now. So the risk reward ratio is not much favorable for creating fresh short positions now. But since the data is not positive, I would better wait for the follow-up move in the stock and avoid any trades at current levels. If any existing long positions are there, then last 2 months the stock has formed a good support around 6,800. So 6,800 was the low in the month of, in fact, August 2023, and even in the month of November the lows were around 6,900. So this range of 6,800 to 6,900 is a good support. So the risk reward is not favorable for creating fresh shorts now post today's gap down opening, but 6,800 would be the pivotal level to watch for this one.
Sure. Well, I also want to take up Reliance Industries because of the sharp up move that we saw yesterday. Of course, it made a new life high, closed at a new life high yesterday, and today we are looking at just a tad bit of profit taking coming through. It's still well above the mark of 28.50 as we speak. That's where the spot is. But Vinay, what's your view on Reliance Industries? Do you think today's dip could be an opportunity to perhaps initiate more longs?
Yeah, so for intraday traders, it would be difficult, but yes, a dip should be bought into because yesterday's move was significant with the rising volumes, and overall pattern on the weekly and monthly chart is quite good. If you were to look at the monthly gains in this month, we have seen more than 10% rise in the stock like Reliance, which is a heavy weighted index stock, and looks very convincing on the charts if you were to see a weekly and monthly setup. So weekly setup indicates that there is an inverted head and shoulder pattern, which is a bullish pattern into a continuation. So if we take the pattern target, it comes around 3,100. It is a positional target, not for the short-term traders or 2-3 days traders. But if we take 2-3 weeks view, then I think Reliance is headed for the next target of 3,100 because overall trend is quite convincing. And after yesterday's move, the pattern target comes in at 3,100, which is an inverted head and shoulder. So yes, buy on dips strategy should be there. 2,800 is the immediate support for the stock at which one can initiate fresh long positions.
Right. Richard, I want to come to you on the Adani Group stocks. Of course, fundamentally, the news flow is a recent upgrade coming from Cantor Fiscal. Today, the stocks are taking a bit of a break, but any of these Adani names that you would look to initiate a fresh long at these levels?
I think a lot of volatility or ups and downs have been seen in last 1 year. Exactly around in January 2023, we saw that Hindenburg news coming in, post which the stock went to a sharp corrective phase, and again most of the losses in some stocks have been recovered. But if I look at the comparative analysis within the group, then two stocks within this entire space, Adani Ports and Adani Power, have stood out with a decent outperformance. In fact, these were the first names to surpass its previous all-time highs, which these stocks had formed in the month of January 2023. So I think the relative strength is clearly more visible in Adani Ports and Adani Power. So if anyone is looking for taking any kind of delivery buying in Adani Group stocks, then I think these two stocks should be preferred over the other ones.
Right, of course, that's the view on Adani Group companies, and of course we've already played the standard disclaimer that the channel that you're watching is an Adani Group entity. But we have more updates on the Sony Z, saga. It's no longer a merger, I guess. And we have my colleague Tamanna who's joining us to tell us more. Tamanna, what else do you have for us now?
So tomorrow is when the arbitration will begin in the Singapore courts, in the Singapore International Arbitration Center. And that really is the news that is seeing the stock zooming this morning. We always knew and we told you that this is going to turn into a bitter battle from the boardroom to the courtrooms, and that now begins tomorrow. What we're learning is that Z will be challenging a couple of things. First, the $90 million penalty that Sony has imposed, that will be challenged in the Singapore court, the SIAC. They are also, as they have said in their public notice, going to demand that Sony does go forward with the merger. They're going to challenge the terms of this termination notice that Sony has put forth. The exciting bit, which is doing the rumors right now, is who the lawyers are going to be. I can't take names because I haven't revealed them yet, but What's being believed is that you might be seeing a former Solicitor General of India versus a former Attorney General of India on both sides of this very, very big battle. Remember what's at stake here. What could have been one of the largest media entities in India has now completely fallen apart. This happened on the 22nd of January, and now you're very quickly seeing the next leg of that legal battle.
Right. Of course, we'll continue to give you updates on the Sony Z saga. Tamanna, thank you so much for getting us the latest in what's really happening there. But of course, we'll continue. For now, of course, the entertainment is rushing up ahead. It's advancing by as much as 6.5%. Last time we checked, yes, it's advancing by, and it's not at day's highs, but well, it is certainly looking at a lot of strength. Well, on that note, we slip into a short break, but on the other side, we talk about stocks and a lot of trading ideas from our experts. Stay tuned in.
Welcome back. You're watching the F&O Show. The market's having a bit of a quiet morning. No surprises there after the very sharp rally that we saw in trade yesterday. Bulls taking stock of the current situation. 21,700 though is being respected on the Nifty. Lots of earnings reaction. Stocks like Muthoot Microfinance are up and about in trade. UTI Asset Management looks great. Z is having a positive day too. ONGC Coal India hit new life highs. So lots of action, but it's largely stock specific on back of earnings. Vinay, I'll come to you with your top trade recommendations today. What are your top strategies that you're recommending for our viewers?
Yeah, so I would go for the stocks which are showing strength and trading near their 52-week highs, and the sector is also supporting. So for now, one of the sector is capital goods sector, and Siemens is the stock which is looking strong on the chart. So I think Siemens can be bought. And yesterday we saw that 4250, which was the crucial resistance, it surpassed that level and sustaining above that level now. So I think Siemens February future can be bought around 4330 is the current price. 4260 for the traders, I would suggest a stop loss. And on the upside, I'm expecting stock to reach a target of 4490. So first pick would be Siemens February future. Second pick is from the NBFC space, Manappuram Finance. So Manappuram Finance has broken out from the narrow consolidation which was there for last 2-3 weeks. And it seems that it is a fresh breakout on the charts and can be utilized as a trading opportunities on the long side. So Manappuram Finance February futures can be bought around 186. Stop loss can be kept at 182. On the upside, I'm expecting a target of 193. So time horizon for both of the stocks and recommendation would be 2 to 3 sessions.
Right. Richard, your trading ideas for today?
Well, I have a trading idea in one of the metal name, which is Hindalco. Recently, the stock has gone through some corrective phase, but if you look at the price volume action in the cash segment, then there were no significant volumes on correction compared to the volumes that we have seen during the price up move. Also, in the derivative segment, not much of short positions are there in the system. Some amount of open interest built up has been seen today along with the price up move. In the option segment, 580, 600 call options have seen good amount of OI built up, which indicates buying happening in call options. So I think move is expected in this series in Hindalco. One can go long with stop below 565, expecting short-term targets around 610.
We were discussing how the arbitration process will kickstart for Sony and Z in Singapore tomorrow. On the charts, how does Z look? It is trading with a gain of nearly 7%. Looks like a good tactical trade. Richard, that question is for you.
So frankly, a bit difficult stock to analyze right now, considering the stock has turned a lot volatile because of the news flows which are going on. But if I look at the trend is not positive in spite of today's pullback move of 6-7% which we have seen. So I think the follow-up move would be more important. So the volatility could continue based on the news flows. But just in a 1 day's pullback move or up move, I won't recommend going long over here. Better to wait and watch for some follow-up moves which could happen.
Vinay, a question for you on HDFC Bank. Do you think that at this point in time, the dust has settled? Are you expecting consolidation on the stock? And if you are, do you think that you would perhaps deploy a straddle or a strangle at this point in time on HDFC Bank?
Sorry, Agam, I would not be able to comment anything on this company. I am a group employee and I will not be able to comment anything on this.
I totally understand that and I reckon that that's my bad. Richard, can I take that question with you?
Yeah, sure. So short-term trend is not positive as of now for HDFC Bank. Certainly, I think long-term investors can look for starting the investments over here, and keeping in mind that the major support for the stock would come around 1365, which could be tested in the near term. So I think from a short-term perspective, still no signs of reversal. We have seen that selling post its results, and there are no buying, not much buying seen yet. So 1365, I think, could be seen in the going ahead. So I won't recommend going long from a short-term trading perspective.
Yeah. I think we've covered a whole bunch of names. I just want to quickly mark EPAC Durables. They listed on the exchanges this morning. Let's see what the stock is getting up to. It was expected to see a gap up, but the stock is under pressure, 6.5% on its very first day of debuting on the exchanges. We've covered quite a few names, but just very quickly, if I can just get Richard in as well on IT names. Richard, we didn't talk to you about IT in the sector. Richard, that sector is not doing too badly right now. Anything on Infi, Coforge, Persistent, KPIT reports numbers as well tomorrow. Would you be looking to initiate a trade here?
So yes, I think Infosys looks good within the IT space. Some consolidation has been seen since last few days, but overall momentum still continues to remain positive. So I think in this volatile market in IT, some of the IT large cap names could see some relative outperformance. Infosys, one can look for buying over here, even 1700 call option if one has to look for initiating longs to option segment. 1700 call options is right now trading around 40 rupees. One can initiate fresh longs with stop loss below 24 rupees and expect target somewhere around 75 to 80 in this series.
Vinay, the same question for you actually. The bulk of the earnings are behind us when it comes to the IT space. Any interesting ideas in the information technology counters, anything that you're spotting at the moment?
So as of now, as Ruchit said, Infosys setup is looking convincing. Results are already out. Most of the large cap stocks came out with a very good results, but right now the technically Infosys looks the best, and it has given breakout from the consolidation which was there for last 3-4 sessions. So I would go for the Infosys first because it is leading as of now, and the current price is 1685. So keeping a 2% stop loss, one can initiate a trade for the target of 4 to 5% on the upside in next 3-4 sessions. And I'm expecting IT sector to perform well because after result announcement they consolidated and again all set to go up from here. So I would suggest going long in Infosys first, and then I will review other stocks. But Infosys looks the best from the IT space.
Right. Thank you. Thank you, Richard. And thank you for joining us as well. It was great to have both of you on our shows. We'll hopefully see both of you soon as well. In the meantime, we'll take a quick break. But before we call it a wrap on the show, in the next conversation with Sundaraman Ramamurthy, MD and CEO at BSE, he talks about the change in people's outlook towards BSE and BSE's positioning in the Indian market. Listen into that conversation.
cash market has been there for a long period. And there, at some point of time, BSE had a significant market share. Somewhere around Jan 2023, when we joined, we found that the market share has deteriorated a lot and come to a single digit. It was hovering between 5 to 6% at that point of time. And in respect of derivatives, which is a 2 decades plus market in India, BSE had never had a steady volume or steady growth in the derivatives.
It was primarily led by LES, right? Liquidity enhancement schemes.
Correct. So it was only a liquidity enhancement scheme which was sustaining it to some levels, and once it was very clear if the LES is withdrawn, the structure may not stand the test of time. So that was the situation in respect of these two. In respect of currency, the futures were doing well and the options were not. Mutual funds, we were doing good. So this is what we inherited in Jan 2023. If you look at it, we try to make some product changes in the cash market. There you cannot create any unique position for yourself, which we can talk about later if you want. The most important area where we felt that we can position ourselves and we can make a change, we thought was derivatives, equity derivatives. So in equity derivatives, based on market feedback, we introduced, or rather reintroduced 2 contracts with slightly modified product specification. And that looks to be working well. That is one reason why the market has shown greater interest into BSE, and it's working. The most important point there is the way we are positioning ourselves is we are a complementary exchange and we are not competing with anybody.